Well, good afternoon and welcome. Welcome to another of our Wednesday webinar series. Webinar Wednesday has been coming around since 2013. This is our 9th in a series of webinars dealing with managing your business through the pandemic. Well, good afternoon. My name is Kelly Bearden. I'm the director of the CSU Bakersfield SBDC, or Small Business Development Center. And like to welcome you, and those of you that have been attending in the past, thank you for your continued support as we continue to weed through the maze that is basically the SBA's programs. And we're talking about the PPP and the EIDL that we'll get into in much greater detail in just a little bit. So it's great to have you today. We got a great guest speaker. We've got a lot to talk about, great topics, so let's get rolling. A little bit about the SBDC program. It is in all 50 states. We're part of the Central California region, which includes 14 counties throughout Central California. You can see our territory there, where our office is located in the Mid-State Development Building in downtown Bakersfield, and we serve all of Kern, Inyo, and Mono counties. So a little bit about the SBDC program. The SBDC program actually provides one-on-one consulting and training to small businesses. As part of the U.S. Small Business Administration, have a variety of other partners, as you're seeing on our screen now, including the Governor's Office of Business and Economic Development. The County of Kern is a great economic development partner for us, and also Mid-State Development, the Kern Economic Development Foundation, and we're part of the Blue Tech Valley High Technology Innovation Cluster throughout the San Joaquin Valley as well. So thank you all to those that make our webinars possible. So right now we're going to jump up here and do a couple of our polls that we like to start with. So our first poll is going to be dealing with EIDL, the Economic Injury Disaster Loan. And so we'll launch our first poll. The question is going to be, if you applied for EIDL, what is your current status? And it's yes, I have, or I will be receiving an EIDL advance. Yes, I have received the EIDL loan. No, I applied before 3/30 and I'm waiting patiently. No, I applied after 3/30 and have not heard. So if you have received an EIDL loan, an EIDL advance, perhaps you've received both. Not too common, but definitely not out of the ordinary. So continue to vote. We probably will keep the polls open for another couple of minutes. We're up to about 33% that have voted. Overwhelmingly, yes, I have received the EIDL advance, but continue to vote. And we're going to end the poll and actually share the results with you. And there are your results. 53% of you have or have been told you will receive the EIDL advance. Only 5% with the EIDL loan, and 18% have not received it and applied before 3/30, and then about 25%, a few more of you, after 3/30. So thank you. That's good information to know moving forward. Over half of you that responded to the poll have received the EIDL advance. So our second poll question is going to be on the PPP. And so it is going to be very simply, have you received a PPP loan? And we're looking for basically how long ago you received it, if you've received it. Because I know the vast majority of you out there have received or are in process to receive a PPP. So let's launch this poll. And it's, have you received the PPP? Yes, my start date was at least 2 weeks ago. Yes, my start date is in the last 2 weeks. No, I still want to apply though. And no, I don't qualify or I don't want it. So getting a great turnout, 52% already. And it is the top two that are kind of dominating our poll, but let a few more of you get in, up to about, oh boy, about 63% of you. So let's end the poll. Last chance, it's over. Let me share the results with you. And look at that, a dead heat tie. 38% of you over 2 weeks ago, 2 weeks or longer, you have had your PPP and have really wanted some final rules on how to spend it correctly. Another 38% in the last 2 weeks. So 3/4 of you have received a PPP that participated in the poll. There's still 13% of you, or 10 individuals out there that want to apply, and another 12% don't either qualify or don't want it. Okay, well, thank you for that. And I will move on to our final poll, which is our final Chevron gas card. And thank you to Chevron for providing $1,000 worth of gas cards to small businesses that they know are struggling during this time, and in the form of 10 $100 cards. This one, you don't have to jump in and vote really quick on this, because it'll be every other correct answer going through the list that's randomly given to us by Zoom. So the question is going to deal with Ben & Jerry's ice cream. And it's going to be, according to a recent power ranking in the New York Times, which Ben & Jerry's ice cream flavor was listed #1. And you have peanut butter half-baked, New York super fudge chunk, you have fish food, American Dream, or you have Cherry Garcia. There's your poll, it's launched. Feel free to vote it up. And again, this is according to one individual, one newspaper reporter. I will tell you right now, I don't agree with it. And it looks like that I am in agreements with everybody, or not everybody, but a large number of you out there. We have 61% of you voted for your last chance to get in and win the gift card for $100 worth of gas through Chevron, provided by the Kern Economic Development Foundation. Here we go, getting in the poll. Got almost 70% of you voted, and let's end it. And I'll share the results without even talking. By far and away, #1 favorite out there, or at least the #1 choice, was Cherry Garcia. And I will agree with you, that is my favorite as well. And the items listed here, starting at the top and going down, 1 through 5, are the top 5 listed in that particular order. So the #1, according to the power ranking in the LA Times, was peanut butter half-baked. 18% of you got that correct, and there will be 16 of you that will be vying for those 10 gift cards. So thank you for playing along with us with these kind of fun little polls. And peanut butter half-baked. Our #2 choice was also the #2 choice on the list, the New York Super Fudge Chunk, which I haven't enjoyed, but we'll probably have to try now. So thank you again, and let's kind of go on and move on with the program. So really streamlined, I think, we're trying to streamline the program and really focus on a couple of things today. And one of it is going to be the EIDL and PPP updates, which have been constant through all 9 of our webinars that we've done. At least with EIDL, it's been all 9, where we've done disaster lending since the very first one. With the stimulus package and the CARES Act came the PPP. We also will actually focus a lot of our time today on forgiveness, of which we know. We're going to talk briefly about the employee tax credit, something we really haven't got into, so we want to mention that. Get into some of the resources and tools, and have your time and your questions. So I'm going to bring in right now our special guest. You've seen him on this webinar series a few times now. And he's actually done a number of webinars with us going back to 2013. Keith Brice is the president of Mid-State Development Corporation. You see his bio there. He's got a long list of accolades. And one of them that I really like to say that he doesn't promote very much is he is the, I believe, 2017 winner of the John Brock Award, a very prestigious award in Kern County for those that give back to their community and volunteer and make a difference in the communities that they live in. Something I'm really, really proud of Keith for earning. So Keith, welcome, and thank you for joining us again.
Thank you, Kelly. Hopefully, if you see me, not sure if you can or not, but that picture was taken when I was allowed to get a haircut. I'm pushing on 2 months without a haircut, so I'm desperately in need of getting one. Thank you again. It's always good to share a little bit of what I know, what's going on in the market, some of the exciting things and some of the not so exciting things. I see we have the EIDL discussion slide up. Kelly, you want me to go directly into that right now?
Let's do that.
Okay, good.
And I won't brag the fact that I'm sheltered in place with 2 other individuals, and one of them is my hairstylist. So.
That's
so
even
this nice
better.
do. Yeah, that's where it comes from.
Yeah, I did attempt to have my son cut my hair early on, and that did not go over well. So I'm just going to hang in there. Hey, real quick on the EIDL, and your slide is really telling in the fact that a couple weeks ago, they opened up the EIDL portal for ag businesses. And as a result, when they opened up the EIDL portal, we'll say that 10 times, for ag businesses, they closed it for non-ag business applications. And that is kind of critical, because if you had a application prior to the new platform, and that was prior to, I think it was the 30th, is that correct, Kelly? I'm sure the date there.
March 30th is correct.
You had to reapply. Well, the catch-22 is if you had applied, prior to March 30th, you had a number starting with 2, the request now is to reapply. The portal is shut down to reapply. So you're going to have to, those out there that had EIDL applications in and did get an application number with a 2, you're going to have to do a little more due diligence. I think you're going to need to send some emails directly to the SBA Disaster Center, and they're very good at responding. But it's important that you get back in the queue somehow while acknowledging you were one of the earlier ones. The other thing, there's a rumor, and unfortunately, in many cases, we're dealing with rumor without some guidance right now, in that they're going to limit the amount of the EIDL loan. Don't know that for a fact. I have several clients that have gotten substantial EIDL loans before, but given the success of the program, there is a rumor that they're looking at limiting it to $150,000. Now, how that's going to work, I'm not sure, because the EIDL calculation had always been a percentage of your gross profit. So if your gross profit exceeds a certain dollar amount, the 150 won't cover what your needs are going to be met. I still think, and I've said early on, the EIDL loan program, I personally felt was better than the PPP. And I think you've seen some of that with the slowdown of the PPP request, in the fact that the PPP program was not necessarily for all small businesses, where the EIDL really, I thought, did a better job because of the longer term. Yeah, they didn't have the forgiveness aspect of it, but you weren't making a payment for the first year, and you're looking at a 30-year note at 3.75%, and it was only going to be secured by a UCC on business assets. So that was the better of the programs. I'm really hoping that they can shift some of the money, if the PPP allocation is still available mid to late June, which it may be, that they could shift some of that to EIDL. And if they do that, I would encourage a lot of the small business customers out there to really look at that EIDL loan program. The number, they will respond. I have had a number of clients that have used the 1-800 number along with the disaster customer service number. It's important when you do reach out to them, you have your application number, something of a reference point in your name.
Yeah, and the only thing I might add to all this is that please, if you were on our earlier webinars, you saw that we had slides that showed over 4 million applied for EIDL. And the EIDL process is being done directly through the SBA's disaster units. And they're doing, I believe they're approving, from what I heard last week, about 1,200 a week that they hope to increase to 2,500 a week. Well, if you have millions of them, or excuse me, 1,200 a day and 2,400 a day is what they hope to get up to. But if you have millions of applications out there, it is going to take a considerable amount of time to get through these. So patience is really going to be the key with EIDL, and hopefully there are more funds that are available, but we'll see. And the 150,000 that Keith was alluding to as far as the EIDL limit for EIDL loans was reported in the Washington Post. It has not been confirmed by SBA. Being a resource partner of SBA, we have not heard that that is true, but they felt good enough to go to press with it. So we'll deal with a little speculation, because in lieu of facts, we'll deal with a little speculation if we have to.
Hey, Kelly, one thing I want to add with the EIDL, and I think I covered in the past, once you have applied for the EIDL loan and you've been accepted, you have the ability to go back for an additional request up to 2 years. So it is not a program that's going to sunset fairly quickly. The issue primarily right now is the lack of funds and the processing time. But once again, I encourage you to keep checking with the SBA's disaster website, keep checking the portal. Maybe one of those things where it's going to open up to non-agricultural businesses this week, or maybe it's next week, or whenever it is. But it's something that you need to get in the habit of checking with on a daily basis.
And if you're an ag business, you can go in and apply still, at
Exactly.
least when I checked last, which was last night. So that is available. Let's move over to the PPP discussion. And just I'll kind of set this up. You know, we've been coming on and we've been talking, like many people, thinking that the backlog of PPP loans for what I call PPP2, the second iteration of PPP, the 310 billion, that was the second helping, so to speak, is open. And as of, you know, last Friday, SBA said they had 40% of that money left. So it's still a great opportunity for the smaller borrowers who did not get in because they either had to wait the extra week and got behind everybody, or they kind of lost some traction. Some of the other things that are kind of new and notable is that on Monday, Treasury Secretary Mnuchin came out and said that there were some technical fixes likely. We've been talking about how the EIDL advance is not forgiven, a forgiven portion. And if you received an advance and a PPP, that part will be subtracted from your forgiven portion of your PPP eventually. So if you received a $10,000 EIDL advance, consider if you have a PPP, you'll be paying that back. And now all of a sudden, the sole props and some of the other individuals are the big winners in all this, because you're replacing your salary for 8 weeks. It's pretty straightforward on how you do that. And you're getting an opportunity to get in when you really didn't know if you would earlier. Some news from this morning. We had talked about this, and this was the slide we had up last week, whereas we encouraged people to look at the self-certification rule that's in your note for the PPP. And to do that, you were to certify that the loan request was necessary to support the ongoing operations of the applicant. And the same slide, we also warned those that received a PPP over 2 million, which is probably not too many of you out there, that you should expect an audit. Well, as of this morning, for the first time in a week, we've had an actual update to the SBA's PPP FAQs. And the FAQs have been essentially kind of the updating and changing of the rules as we've gone along to clarify and to provide more direction and guidance for us. So one of the things that the only thing that came up today was essentially that tomorrow on May 14th, the safe harbor for those that received more than 2 million in PPPs that the Treasury has deemed they want to give back. A lot of our smaller borrowers have been kind of caught up in this dilemma. about whether they need to give the money back or not. For example, a lot of you have been home quarantined and have been doing some home improvement projects, planting a garden. Well, residential nurseries are doing really, really well these days. So that really couldn't have been forecast 8 weeks ago. So this new FAQ that came out has the actual SBA saying that anybody whose PPP is less than 2 million will be deemed to have made the required certification necessary for doing this loan request in good faith. So essentially what that means is if your PPP is less than $2 million, you're fine. You don't really need to go in and try to figure out what the final guidance is going to be on if you actually really need this money and these funds in order to continue.
Hey Kelly, can I add something?
Absolutely.
One thing that I've been telling customers is, when in doubt, you have to really go back to the real intent of the CARES Act. And the real intent of the CARES Act was to get money out to small businesses so they could retain or rehire. And that was the whole intent. That was what Congress had intended. They then subsequently designated, the SBA to be the conduit in the Treasury to set some of the criteria, which would then roll to the banks. So there's a lot of things that were interpreted either via guidance from the Fed or guidance from the SBA that somewhat counter to what the intent of the CARES Act. I think that the last bit with the safe harbor is going back to, we want the customers to be comfortable that if they made the assertion that they were impacted, that there's not necessarily going to be any main issues. Now, obviously, if there's fraud or if there's things of that nature, or if you have the situation where you had some substantial companies receiving PPPs that did have the ability to get financing somewhere place else, then that was an issue. And quite frankly, that's probably why you've seen a slowdown of the larger companies applying for PPPs, along with a lot of the larger companies giving back to PPPs, because not only did they have the capacity to get financing elsewhere, but they may not have been as impacted. In a lot of cases, it was a PR nightmare for those companies. One other thing in thinking about the CARES Act, and I've thought about this, they rolled out a stimulus program with the intent of the jobs to return fairly quickly. They didn't factor the shelter-in-place rules that different states were going to have. So, on the surface, it's great to be able to, have those monies. But if your state, county, community still has a shelter in place and you've taken your PPP, the meter has started. So I fully expect when we get some guidance, and I would be very surprised if we didn't get any guidance this week, that there may be some significant changes to the measuring point. And it may be, I've heard rumors that again, this is rumor, you don't base your decision on it, but the forgiveness may start when you reach full employment capacity where you were prior. Again, if your state is only allowing 50% capacity in a restaurant, well, you're not going to be at that level yet. So I fully expect some changes, because I know the intent of the act, and the intent is to help small businesses, not penalize them with a short-term loan that may be impactful. Had to give that editorial real quick, Kelly, but that's just my thoughts on it.
Well, and I believe that as well. And it is kind of fun being able to speculate for a little bit. And Because, you know, some of my favorite philosophers in life were NFL football coaches like Jim Morrow, who said one time very famously, you think you know, but you just don't know. And that's where we are, I think, with a lot of the stuff today, but it's got to go back to the intent, and it's got to go back to exactly what they're trying to get out of this. And one of the other things, well, there's a little editorial. A lot of the other things that keep coming up is the payroll going to be at 75%? And wearing my Jim Morrow hat, I would say yes, because that is the intent. It is called the Payroll Protection Program. And one way, shape, or form, if it's by lengthening the length of the term, which I know impacts a lot of business owners because they've already tried to start spending based on that 60-day or 8-week window. And so that has impacted a lot of decisions that makes it very difficult not having the guidance earlier, but getting a proper fix on it. So just real quickly, it is still open and has money. We mentioned 40% as of last Friday. After this, you know, we predicted they were going to go real quick. We thought the money would be gone. There's some reasons for that. Keith mentioned that some failed to understand the intent of the program. In reading an article this week on some people who applied multiple times, we found a woman in Kansas who applied 8 different times, received 2 different funds. And by the very nature of how the speed and the rush to get these through the SBA electronic transmitting system, where you basically uploaded a large number of loans at a time, it didn't give the SBA the chance to check for duplicates. And so that is one of the reasons, is that duplicates, you know, some big banks were saying 10% of their applications were duplicates, and smaller banks set up to 50%. So, and I understand why borrowers sought multiple lending sources. It's because they're big bank customers, and their big banks weren't really communicating and letting them know oftentimes, or they just felt that there was a need in order to survive, that they needed to be certain of that, and went to different sources. So Keith mentioned the PR that some of the larger companies went through. Why did PPP fall out of favor? Well, a lot of people are waiting for terms and waiting for everything to clarify. Funding payroll didn't meet a lot of your needs. So a lot of the larger businesses went to the Fed's Main Street lending programs, to where they can get money in that way. And, you know, we've received a lot of inquiries about people wanting to give the money back. And my guidance on that has been to just wait a little bit. Wait until the final rules are out, because I know it's been difficult. And we've had literally, I think I've had emails or have talked to nearly probably 10 or 12 people that were just fed up and going to give it back. You know, I don't think even, you know, especially with today's ruling coming out, that's really, really important now. It's really safe now. But even if you held on to the money, let's say you got $100,000 PPP, you couldn't spend it because your employees weren't going back to work, and you said, well, I'm going to send it back. If you hold on to that money at 1%, because your interest rate starts at 1% once you receive the money, even though it is deferred, that 1% after 8 weeks is going to amount to interest of $167. And for $167, wouldn't you want the security of hoping that maybe the rules change as we get final rules and you would be able to spend it? You can always elect not to spend it and to send it back. But if you get charged that $167 worth of interest, in my opinion, and I think Keith might agree, that's all you would be out. You're not out an application fee or anything else.
Yeah, Kelly, that's correct. And as you mentioned before, you know, there are changes. Another prime example was the change that there was a requirement to hire back the same amount of employees. And then there'd been some interpretation that if you made a good faith effort in hiring back and documenting it via written form, you may be safe also. So I fully expect there's going to be some final guidance, and I think it's going to be more liberal than what you think. However, the intent is still going to be 75% going towards employees. I don't see that changing, but the measured period and the number of employees, I think that will change.
We have some consistency there for sure. So just a little bit, let's get into a little discussion on forgiveness, and then I'm going to share a little Excel spreadsheet that I've been in the process of putting together. It just might help you with your audit process and to go through the process really quickly again. The payroll in the note says 75% on payroll, and Keith and I both agree that's going to likely stay the same. Which if you spend that 75% in payroll, then you can spend an additional 25% on rents and utilities. The rents and utilities will go down measurably or commensurate with the 75% that you spend on payroll. So if you only spend half of that on payroll, you would only be able to spend, at least theoretically, in our opinions, moving forward, half of that on rents and utilities. We mentioned the idle advancement. And you know, one thing also on the idle advance, I've been telling clients when they ask, you know, that's going to be up to $10,000. And if it's $10,000, you're going to be paying that back over 18 months. We've talked a little bit about this in the past, but what that's going to evolve is somewhere around a $500 or $550 a month payment for those 18 months once it's amortized out. Just a rule of thumb, let's say it's $500 per 10,000. That is what you need to be thinking of you're going to be paying back if you have a much larger, and a lot of people don't want 100% forgiveness. They want some of this for working capital and need it going forward. So your rule of thumb on your payment back on the unforgiven portion, just as a rule of thumb, use $500 per 10,000 moving forward. We're going to go through the little exercise just because the banks are again going to be inundated like they were at the beginning of the process. And I think we have a little spreadsheet that might help you as far as trying to keep the information together and to provide an audit trail. I like having a spend planned with a start and end date moving forward. Business owners that write their own paycheck with everybody else's, no matter if you take draws in the past, you pay yourself a bonus, however you do it. I think it's just cleaner and easier for the bank when you go through the forgiveness process to have your check right there with everybody else's. In Congress, we think that Congress might be assisting with the final rules now that the Senate is back and the House is back shortly. So we think that there's a lot going on that maybe even SBA and the Treasury Secretary can't fix everything on their own, that it's going to require some type of a legislative fix.
Hey, Kelly, a real time example of that is the IRS came out 2 weeks ago with a ruling that if you had gotten a PPP loan and you had a certain amount that was going to be forgiven, then you would not be allowed to deduct that on your normal expenses. So effectively, that's a tax on the PPP loan. There are a number of active Congress folks that are in the process of trying to change and or revise that rule. So again, those are the kind of things that you had the intent and then you had the consequences of the IRS coming back with that. One last thing, you had do a detailed audit trail. We've been encouraging everybody, make sure you set up a separate account so you can know where the flows with that PPP is going. And a lot of the banks are requiring that anyway.
Yeah, and it's really easy to do if you went to a different lender than if you opened up a new account with the lender to begin with through your PPP process. So yeah, that is the ideal way to have everything and hold it in an account. So the Treasury Secretary definitely came out and said that there might be some technical fix for the restaurants. And he said, to quote him, the technical fixes as we see different issues come up may be possible. But then on the same interview on Monday, he said that they would need to work with Congress to fix the broad parameters of the program. And I don't know exactly, maybe Keith can maybe chime in on what he thinks broad parameters are. He's on record for saying he believes in the 75% on the payroll. So I don't think that was one of the broad parameters, although could be.
Yeah, Kelly, I think it's like I stated earlier, when they rolled the CARES Act, they made some assumptions that, or they didn't take into consideration the shelter in place requirements and the length of that, along with the mentality of folks when the shelter in place is been removed. How quickly are they going to go back to restaurants, bars, and other viable businesses? So I think you really are going to see some leeway in the measurement period. And it's common sense, and folks, I like to believe are going to use some common sense on how they're going to do that.
Yes, yeah, I agree. So mentioned a few tools and resources that are going to be available. At the conclusion of the webinar in the next day or so, what we'll do is we'll send out an email to those who attended and have a number of resources that are available. This will be one of them. You could either delete the email. We're finding out that it's easier to do that rather than to individually send everything out to different people. So if you don't want the email, delete it. But there will be a number of resources, including some of them we'll go over. Here's one of them, and it's just kind of like a PPP loan tracking company here. So some of the things are, it's just a simple spreadsheet. Starts with your PPP loan amount and kind of goes through. There's also an area to where you can actually, in this instant, it's a weekly pay period. So I know that if any of my weekly employees make over $1,923, they exceed the $100,000 cap. But really simple, it's the list of payroll, the wages, some retirement, health insurance, and then the state taxes. And it kind of gives you these in addition to rents. Here's my example that I had been using earlier with my Kelly's Grill. So those of you that saw that in the past, it's fairly consistent. But what it does is it just gives you a listing and kind of gives you a little snapshot up here in the corner if you're meeting the percentage, of which under this scenario I am. One thing I want to add to this, and I haven't done it yet, is kind of where you stand as far as your gross wages. Because as a manager, you're going to really need to know if you're at 16%, and you 16,000, excuse me, for 3 weeks, and you essentially have 4 weeks left, how much are you going to need to spend to get to the 75%? And again, this likely can get extended to 12 weeks or maybe even 16 weeks, given the final rules, and it gets spread out and really makes your decisions really tough right now, I know. But this kind of is a tool that might help you a little bit, make it a little bit easier. It's the same one that we've had with numerous tabs on the bottom, just kind of a restaurant example, and goes through the calculation. And one thing that I really think is important as you move forward and expense your PPP loan is to go back at your initial PPP calculation that you turned into the bank and got the loan. And anytime that you follow that and make 75% of that payroll amount, then you're fine. In this example right here, and it's true with most of you that have a multiplier of 2.5 on your loans, I know some of them that came in a little less than that, but banks could go to 2.5. In this case, my average monthly was 40,000, so my payroll is going to be 80,000 of that 120. So just a little something that if you kind of help you with the PPP process and getting down the road with that. So let me go back to the slides and we'll send all this stuff out for you. You don't even need to ask. So let's shift bases a little bit and talk about some of the other opportunities after PPP, and also get a lender's perspective from Keith on what's going on, what he's going to be doing as the largest SBA loan company by volume in Kern County, on what perspective he has and sees moving forward from this.
So Kelly, I will tell you, probably the last easily 2 weeks now, 2 solid weeks. We have gotten very few inquiries about PPP and EIDL. And that same thing is happening with a lot of the lenders out there, in that they've gone through the initial crunch. And now they're back to, they've pivoted to one, looking at new loans, and looking at new SBA loans, because if you take away the pivot, you take away the EIDL program, there are some incentives with the SBA 7A and 504 loan, where you have certain amount of payments that are made on new loans for 6 months on loans that are processed before September 20th. So there's a push with the lenders to look away from the PPP, look away from the EIDL for now. They're going to have to come back once the final rules are out, and once the wave of forgivenesses are going to start to come through. But in that interim period, they are looking at normal loans, whatever we consider normal. The biggest change that I'm seeing with any borrowing request, and any business for that matter, lenders are asking three things: how your business was before, how your business operated, excuse me, how your business has been operating, during the crisis, so to speak, and what do you project your business to look like next year, 2 years from now, even 3 years from now. And those are the hard things to really gauge. But your lender will require, you may have never had to do projections before for a lender, but the lender's saying, you have to convince me, if you're asking me to borrow, that you're going to have the gross revenue next year, and why are you going to have the gross revenue? And it's an estimate, and that's where Kelly, here's a plug, the SBDC consultants can assist you. But I see that as a requirement. We submitted a loan on Friday and it was approved on Monday, and it was a $1.5 million loan, which is a substantial loan. So the SBA is approving loans fairly quickly in the regular area, but I do see that as a significant change. Nothing so far on the SBA Bridge Express loans. I do see that coming up probably in the next 6 to 7 months. I've covered the debt relief. If you're in the process of expanding and you want to use an SBA program, now's the time to do it, especially if you can get the loan in place and funded before September 20th, because you will have payments that are going to be made for 6 months by the end. It's not a forgiveness, excuse me. It is a forgiveness of those 6 months payments. It's not added on to the back of the loan. CDFI, I think Kelly, you're gonna talk a little bit about what's happening, but I think we have some good things that are going to be happening in the community there.
Yeah, I think that there are going to be some more programs that come around. We'll just have to be patient and get through our PPPs and EIDLs and watch our P's and Q's, and there should be some good stuff coming. And then there's some other equity funding programs. I really see crowdfunding as being important for some small businesses moving forward, and seeing their customers really come back and support them that have really struggled through this particular process. And we've talked about some of these other ones before, as far as strategic partnering and some of the other things. Just real quick, I want to just touch on the employee retention credit, which is a tax credit that's in the CARES Act. And just touch on it a little bit, because we really haven't touched on it, and then really get to your questions. So be loading up the question box. We're going to try to have plenty of employees on their payroll.
Hey, Kelly, there was, you had on the slide angel fund investors. There was a great article last few days in the Bakersfield Californian that touched on the local angel fund here and funding to Bakersfield-based or Bakersfield-connected small businesses. So if you have a chance, go back and reach out and look at that. Again, that gives you an idea of some of the alternate sources of funding that's actually happening right now in Kern County.
And they're going to remain being active, the Kern Venture Group. So yes, good point. Some of the other things on the tax credit, and we'll send an FAQ to the IR, which will be part of the resources, but it is something that the employee retention tax credit was really something that the bigger companies really gravitated to when they left, your Ruth Chris and others potentially, when they left the PPP program. So, but there are some small business implications to where this could really come into play as we go down. We'll send the PAQs and we'll talk about it, the FAQs, and talk about it later when we get a chance, have a little bit more time, but we're getting a lot of questions and really want to get to your questions today. As you know, that as I say every time, it's important that you understand and manage your cash flow over the next few months. We'll include this in the resources that we send out. You've seen it, our Excel version of our cash flow forecast, and really encourage you to contact the SBDC and work with the cash flow specialist if you really want to work with and really want to dial in your cash flow and really try to figure out exactly where your shortfalls are going to be over the next, the near future and elsewhere. And here are the resources that we'll send out to you. It'll include a variety of different resources, the tax credit, the FAQs, which have now up to 46 of them, that including the one we read today, the cash flow forecast, the Excel spreadsheet track, and on from there. So we'll be back next week, but let's go to your questions for now and see what you got for Keith today. So Keith, start right at the top at the chat box, and then we're going to move over to the Q&A section. So question number one, we applied for an PPP but have not been contacted. What should we do?
I would go directly to that lender. I'm surprised, depending on when you applied, most of the lenders that I've talked to, they've worked through a lot of their backlog. Like I said, a lot of them are pivoting to non-PPP requests. So I would call. It's always key when you're dealing with a financial institution to get a name. If you can get a name, then that's the best way of contacting. If you're relying, they may push you to a portal, but you need to get a name. So it's important that you go in there.
The next question is, can you use part of your PPP and return the portion you don't use?
Yeah. I mean, you're paying back. I mean, you're not, you're effectively going to just pay it back as soon as you get your forgiveness piece. But yeah, and that's going to be, a lot of companies out there are not going to meet the forgiveness piece. So if they've retained that money and not spent it on other things, then that could go back towards the loan.
Next question is, my accountant stated if PPP and EIDL are under 10,000, it will be forgiven. Can you speak to this?
Are you talking about the EIDL advance? The EIDL advance is a grant. So that's a correct statement. Now, I have not heard that there was a $10,000 forgiveness under the PPP. The only forgiveness aspect that I've heard so far is based on the 75-25 metrics in the rehiring. But having said that, I mean, there may be something out there. I have not heard that. Have you, Kelly?
Well, the only thing I would add is that if you have a PPP and you get an EIDL advance, you have both of them, then the EIDL portion, it's my understanding, is not forgiven.
That's correct.
So if you get the EIDL by itself and it's an EIDL advance, then yes. If you get the PPP by itself and follow the rules, hit the 75-25, like you mentioned, Keith, then that would be. But in conjunction, I think together, the idle part is going to be taxable. Or excuse me, it's going to be not forgiven. What about the 8-week stipulation, or is this something that will be discussed here? And yeah, I think we talked about that a little bit, right, Keith?
Yeah, it's that's the rule now. But again, boy, I'm willing to not necessarily make a prediction, but I do see that as a possibility of changing.
Okay, the next question is, I received an EIDL of $8,000. I also received a PPP 2 weeks ago, and I haven't used it at all because I'm scared it won't be forgiven. I cannot afford the loan payment, and I am uncertain as if my business will survive this. Does the EIDL grant I received become a loan because I got the PPP?
Well, the EIDL grant is a grant already. What you can't do is you cannot duplicate your expenses on the EIDL and the PPP. So, if you're going to pick either one, and what I'm hearing is that you're not going to meet whatever the perceived measuring point is for the PPP, then I would definitely return the or pay the PPP and keep the EIDL.
And what I would do, Christy, is I would contact an SBDC director in your community, wherever you are, and talk about this in more detail. The one aspect of it that makes it uncertain for me is if you have signed the PPP note, it already then says if you received an EIDL grant, it will roll into it. And that will be unforgiven. But if you somehow turn it back, that's one of those fine rules. But I would definitely get guidance if you're concerned your business might not survive this. Get a mentor and work one-on-one. Joe, how far behind is PPP? We applied approximately 6 weeks ago and no word.
Boy, that is surprising. It sounds like you had applied at a larger institution that's going through their backlog. I know a lot of the local independents in credit union, they've worked through a lot of their PPP. So 6 weeks is there's something. There's more to that. I would reach out and find out if they're, you didn't supply the proper documentation. Quite frankly, I have not heard of anybody going that long, to be honest with you.
That is a long time. And I would definitely reach out to them and then consider doing maybe talking to another lender if you're not satisfied. Does the business owner need to be on payroll, or can they take a draw to qualify for forgiveness? Is payroll based on gross or net to qualify for the 75%? So 2 questions there. Does the business owner need to be on payroll, or can they take a draw to qualify for forgiveness? I'm going to say no, you don't. I think it's cleaner that way. But if you did your calculation to begin with, kind of with the hybrid method where you had your earnings that were actually part of the PPP qualification, and then in addition, then added on your employees, which a lot of people did and was permissible, then it doesn't matter if you take the draw, I don't believe. I just think it's cleaner if you just pay yourself with everybody else with those proceeds. And
however you do it, you got to document it. You have to have clear documentation.
And just make it easy for the bank to understand what happened when you go through the forgiveness process. And the second part of that is payroll based on gross or net to qualify for the 75%. And it's gross. It is so gross, but it is gross. Next question, a sole proprietorship. The owner normally takes a draw. It kind of sounds like the same question. So do I need to put myself on payroll? I think we just answered that. Next question. I have 9 employees. I had to give them $2,000 bonuses to bribe them back to come to work because of the $2,400 extra that they get in unemployment is given away. I don't see a question there, but there are a couple of things that we talked about last week with unemployment. And one was if the employee didn't come back, then you didn't really, you could document the fact that they stayed out on unemployment rather than coming back, and it wouldn't count against them not coming back. So that's one of the things. That was question number 40 and is on that FAQs if you want to read that. And also it even goes a step farther in saying that they could lose their unemployment because of that. So maybe it wasn't necessary to have to bribe them. But then again, you have to look at it from another perspective too, is that you have a trained workforce who has worked for you and who knows how to operate and work in your particular business. And there's a lot of value to that. So by having your existing employees come back is kind of important. Okay, next question for you, Keith. If you are a small corporation in which you are the owner and only employee where you are receiving payments from the company as a draw, how will you prove that that money is going for payroll? Transferring the total of the PPP into my personal work account. The amount was just $10,900.
Well, first off, you had to supply that information for the bank to approve you and for them to get a PPP number. So the documentation that the bank required for verification, I'm making a huge assumption, but I'm pretty confident it's going to be some of the same documentation that you're going to apply when you're going to ask for forgiveness.
Yeah, and I agree, and I wouldn't take the whole draw and put it in the account, even though I think it's straightforward. You have your application on how you applied, and it was based on your earnings from the year before. So it's pretty straightforward in your situation. But what I would do is I would just take probably 4 payments. I'd look at 4 payments every other week and do my 8 weeks and take 4 payments, divvy it out, document it, have the checks, go to the bank, get your forgiveness, and get on down the road. Can you pay employee bonuses during the 8 weeks? You want to take a stab at that, Keith?
Well, you know, it would, if that's part of your payroll expense and you're using that as a measurement, I mean, it's going to the employees. I would think it would be acceptable. Again, it's in my mind, it's gotta make sense because you're rehiring them or you're retaining them, and that is part of what you're paying, and it's going to be on your payroll record. So I would say yes.
Yeah, and I'm a little mixed on this from the standpoint that there's plenty of businesses that are paying hazard pay right now.
Right.
And I think it's totally justified.
Right.
For people that are out there working, dealing with a lot of the public and putting themselves at risk. So I see where it's warranted and justified. The question I have on it comes back to some of the payroll calculators that you can find online that I haven't really used or pushed on this will show the full-time equivalence that was in the initial. And the payroll forgiveness does at least did, we'll find out if it does when the final rules come out, dealt with full-time equivalents and bringing back the same about number of people. But there are a lot of issues with that because people could be paid more than they were last year when the test was run. You had a minimum wage increase, so it's almost impossible to bring back the same number of full-time equivalents from people that were earning less money last year. So that would be the only thing I would be conflicted, but that's one of those things that will be truly defined, I am sure, in the final rules that are due soon.
But I also think that they're going to allow a certain amount of common sense, you know. And you know, from everything that I know, they are trying not to penalize the small business owner or the workforce. So if it makes sense to allow that, I would be surprised if it was eliminated.
About a week and a half ago, I received an email from SBA that my EIDL application was being processed in the order it was received. Should I expect funding at this point?
You're going to get an acknowledgement of what your funding amount is. What I would do is follow back up. You have your number. You can either call the 1-800 number, or you can go online to the disaster and key it in, and a high probability somebody will call you. So it's one of those, especially with the EIDL, if you've got knowledge that it's been approved, that's a good thing. And I would just reach out to them, and you cannot bug them too much.
Here's something we haven't touched on, Keith. If you received an EIDL advance, does that mean that you were accepted for an EIDL loan? Haven't heard back regarding the loan.
Again, it depends on your number. There is a backlog on the EIDL, and like I said to the last question, reach out. You have the 1-800 number, and you have the email, and they are very good at responding back. So you may not get the response back that day, but you'll get a response back. So I would not hesitate in reaching out. Now, the question is, did they in fact change the formula on how they're going to measure the loan amount? That's something that we talked about earlier, where there was a rumor it was going to be a $150,000 limit. Well, that's counter to the original underwriting based on a percentage of the gross profit last year. So that I don't know at this time.
Okay. I see we just ran over for about the 6th week in a row, or maybe the 9th week in a row. But those of you who want to stay on, we're going to try to get through most, if not all, of these questions. Here's one. Right now, the amount I've spent on payroll is above 75%, and utilities are below 25%. Will this be a problem when I'm audited?
No.
Very simple no. Not a problem at all. 75% is your magic number. Stay above that and you'll be fine. As long as the other 25% don't go to utilities and go to something else, as long as it's an actual use that's approved. When requesting by email a status of the EIDL loan, the automatic reply was, if you have questions, please feel free to reach out to us via email. Is this a continuous loop of non-response? I guess I'll answer that, and I guess if keep trying, and yeah, I don't know. Maybe it goes on automatic response at certain times, and maybe it's picked up at other times. We found that people were calling and not getting through, but yet when they actually called at 3 o'clock in the morning, they were getting through.
Kelly, one thing, I don't know if the Fresno district office is going to have a webinar next week. I don't know if you can post that on your website, but what Kelly and I have found is that when the Fresno SBA district office has a webinar, they also have a representative from the SBA that deals with the EIDL loan program. And that representative will give out his personal email, but you have to reference that you were part of that webinar, and he will get back to you. So again, I'm not sure. I'm pretty sure they're going to have one because the final rules are going to be out. And if EIDL is part of that, and if you participate in that, you'll be able to get a insider email that you can definitely reference.
A couple more questions. Did I understand correctly? If somebody gets a 7A or 504 loan before September 30th, the SBA will make payments for the first 6 months?
That's correct.
Heck of a deal. Regarding the PPP, for an employee that makes over $100,000 per year, are they eligible for 75% of payroll forgiveness not to exceed $100,000? I'm not sure how the forgiveness works. So again, that was for somebody making over 100,000, are they eligible for 75% of the payroll forgiveness not to exceed 100,000? I don't know if we have enough information there. Is that one employee only? I would be safe to say that if you do the calculation up to the maximum amount you can pay that person for 100,000, but I would go back to your original payroll calculation when you got the PPP loan and go see how much really that person was actually getting. And then I would try to stay consistent with that.
Yeah.
Okay. What is considered utility expense?
I would say PG&E, gas, Southern Cal Gas. What's designated in your utility expense area on your accounting? I don't know what the question is there. Are you asking?
I think it's just what is utility, and I think it's a fixed utility in most cases, being electrical, gas, water, sewer.
I think that's it.
Phone, maybe cell phone. Maybe cell phone if you're feeling a little.
I'm not confident with the phone answer, but I'm confident with all the other ones, Kelly.
You mean the cell phone?
Yeah.
Yeah, because I think it goes off of a fixed utility basis. I think that was a question we had last week about using diesel in a truck or something. So yeah, I would be safe with fixed utilities. I would even say as far as direct TV or cable television, if you're a sports bar. So I think it depends a little bit on the business, but if it's a fixed actual utility, that expense would count. Hello, Chris. If a business gets a PPP for 100,000 but only uses 60,000, would the 60 be forgiven? Would the 60 be forgiven if 90% of that is used for payroll and 10% for lease and utility? So what you're using is 60. Let me rephrase this a little bit. Take a few of the numbers out. You use 60% of the payroll instead of 75%. In my opinion, that 60% will be forgiven if it's allowable. And the 10% would likely be for lease. And then the remaining amount would be turned into a 2-year term loan at 1% amortized over 18 months.
That's correct.
Okay, well, last question is going to deal with the $100,000 maximum per employee. Today we used an example that showed that if you use a weekly payroll, 52 weeks, and you come up with $1,923.08, that actually goes up to, I guess, 100,000 for the entire year. Would you be able to use that in forgiveness of the loan? And I would say most likely, but again, I would go back and try to figure out exactly how much that employee was in your original application. And that does keep it under that. So it depends on how many employees and things like that. But because let's say you have, I just think it needs to be in conjunction with the rest of the employees that you have. And hopefully there'll be more on final rules on 100,000 and plus and how to do that, because I keep trying to answer this question every week, and this is why I have Keith on, so he can bail me out right now.
Yeah, I just, again, it's going to go back to what you originally submitted, what you paid. 100,000 is the magic number that they don't want reimbursement or forgiveness over that for per employee. So I think if you stay with that somehow, and we get the final rules, we'll know. But I don't see that changing that much, Kelly. I really don't.
And our final question is, I own a farm and I've applied for an SBA loan. Okay, I don't know if that's a PPP or an EIDL, but maybe we'll figure it out. I have not accepted the loan offer yet. I was just emailed the offer yesterday, and I am a sole proprietor and want to understand that I can apply for PPP to pay myself. So I'm assuming that's a PPP loan. And if you applied for it yourself based on your earnings from last year, then my answer to that is yes, you can do that. That's one of the beautiful things about this particular.
Kelly, it sounds like that it's an EIDL though. And I may be wrong. So the question is, he hasn't accepted the EIDL, but he's looking to see if he can get or she, whomever it is, they can get a PPP. The answer is you can do a PPP for a sole prop. You can do an EIDL, but you can't duplicate expenses. In other words, you cannot ask for forgiveness on your EIDL, or you can't ask for forgiveness on your PPP and be for the same item. So if you hold true to that, you should be fine.
And I will just throw in at the end that if what we've mentioned earlier, if you get an EIDL, it's an EIDL advance, not an EIDL grant. And if you don't apply for a PPP, that will be forgiven. And so if it is an EIDL advance, and let's say if you're a sole proprietor with no employees, you'd probably only be $1,000. So if you had earnings on your tax return last year and you are actually talking about a PPP loan, it would be based on your earnings from last year. And the PPP is a payroll protection program. And in this case, self-employment payroll as well. So being a sole proprietor, yes, understandably, that is considered that. Okay. Keith, thanks for joining us again. It's great having you on.
No problem. Anytime, Kelly.
I'll tell you, don't tell me that. You'll be back every week. So for Keith Brice, I'm Kelly Bearden. We'll be back, or at least maybe Keith will be back next week and not me. Who knows? We're all day to day anyway. So anyway, one way, shape, or form, we're going to have another one coming up on May 20th, next Wednesday. We'll be back, and we'll be back maybe with final rules. So maybe we get the Holy Grail next week. Who knows? By next week. So thanks for joining us, Keith. And for myself, Kelly Bearden, have a great day. We'll see you next time. Bye-bye now.